You are listening to Investing Matters, brought to you in association with London South East. This is the show that provides informative, educational and entertaining content from the world of investing. We do not give advice, so please do your own research.
Hello and welcome to this Investing Matters podcast. My name is Peter Higgins and you can find me at Conquest3 on Twitter. And I'm here with Mike McCudden, CEO of InfinitX.
Hi, Peter.
We're going to be talking about the platform, what it does, how it does it, why it's important for capital markets and private investors, startups and entrepreneurs. Mike's got a fantastic history. I'm going to delve into that a little bit as well. But first, hello, Mike. How are you doing?
Good, thank you. Happy Friday. Sun is shining here in Glasgow. Good to speak to you.
Good to speak to you from Glasgow. Mike, I want to start this interview because you've got a fantastic history, which I want to delve into a little bit. I want to start first with your first job, having graduated, because you did a degree in risk management. And that seems to be a thread throughout this conversation. And I wanted to start there. Please share with us the background behind that. Why risk management, what it led to, and then your first job.
I think because at uni, nobody else would take me, and that was the one that was available.
Great start.
I studied risk management, and I guess through that, I kind of developed, I suppose, what age was it, 18, 19? I developed an interest in financial risk management, which made me into capital markets and down that rabbit hole, and I'm still down there somewhere at the moment. So that was my journey into risk management back at Glasgow Caledonian Uni. We shout out for my alma mater there.
Brilliant. Now, I'm not sure if it was your first job or not, but Aitken Campbell Co, senior market maker. Now, everyone's got these different ideas about what a market maker is. You went in there and you also became a senior market maker.
Yeah.
So just cancel out some myths, but also tell us a little bit about what a market maker does, please.
Well, I mean, I don't want to forget about McDonald's. I mean, I was there for a few years as well. Learned a lot. But yeah, I gave up McDonald's, went into the market making game. Actually, after I'd planned to leave uni, I had a summer internship with a company called West LB Panmure. So I was thrust onto the trading floor there, and I found it a very eye-opening experience. And then after uni, an opportunity came up for a firm that I'd actually never heard of called Aitken Campbell Co, and it was one of the old market makers, actually originally affiliated with the Scottish Stock Exchange, which was in Glasgow at that point. Going back, I mean, it was a 100-year-old business. It was around for a long time, and I went into that pretty eyes open, not really sure what a market maker or a stock jobber was, or any of the other terms that are used for it. So, I know I got a job in there. I think they were paying me about 11 grand a year, and it was basically T-boy assisting the market makers, and I just loved the cut and thrust of it, the environment, the risk, the stress, the everything really about managing all this order flow that was coming through from brokers and various other, intermediaries and whatnot. And you're there making the price, and very quickly I kind of got to grips with it. I then, got my first book, as they call it. So I managed, what did I manage again? Miners to breweries to, telcos to, there was a whole book of business, probably about 50 stocks, right? So the job of the market maker, really a competing market maker, at that point we were all plugged into the London Stock Exchange, was to compete on the bid offer spread with other market makers. And there was another 15, 20 or so around at that time, all varying different sizes. And, we were a main full-size market maker, as they're called. And you had to make a price. You're a bookie, essentially. So you follow these stocks, you get to know them intimately. You understand the behaviors of the other market makers, and you're there primarily as a group to provide a price, provide liquidity, to make sure the market works. And that is the regime we've been operating in the UK for forever, really. You know, I loved it. I absolutely loved it. I was there for 6-7 years. We were bought out in 2001, probably 2 years into it, by a consortium led by Charles Schwab and TD Bank. And we became their kind of UK market maker. So yeah, no, we were a big player, really enjoyed it, loved the risk. And I think market making then was a little bit different to what it is now. But yeah, I certainly loved it. I loved it. Best job ever, as we always say.
Best job ever. So can you just quell some of the myths about what a market maker can and can't do, though? Because there's certain institutions out there, fund managers even, and even obviously retail investors have got this thing about, oh, market makers have done this to my stock, and just complete nonsense.
Yeah, I mean, well, no idea where that comes from, really. Market makers have done this to my stock. You're probably talking to maybe a CFD spread bet trader or something. That can be quite different.
Yes.
Because certain companies will make their own market, which is away from, they're not a market maker. So they'll make their own price. And maybe they're complaining about that. I don't know, but certainly market making, since I was around, so pre-2008, actually, really, you know, firms, jobbers, market makers, whatever, would take on a lot of risk and supply of a lot of liquidity. So we had something called the back book, and you would run pretty large positions. Nowadays, as far as I'm aware, but you know, so I'm sure somebody out there will correct me if I'm wrong, there's not as much risk taken on, and that's certainly been mandated through a lot of the banks that have market making divisions. So, so I can understand it's probably a little bit more volatility. The spreads are probably a little bit wider, but certainly back in my day, I had to be on point for a price. So if my phone went off, it was either another competing market maker who had a large order to fulfill at a set price. That was between him and his client. And you've kind of got a wee bit of second guessing at that point. So you might get a phone call from Goldman Sachs, whoever, say, right, what's your price in size in a particular company? Which means that there is a kind of normal market size that you'd quote up to if you're a full-size market maker, but then they'd phone you up and want something a lot larger. So you've got to think about, well, actually, what have I got in my back book? What is the overall risk position of the firm? You've got to take all these things into consideration in about 4 seconds, give the guy an answer, see where you make his price, do a bit of negotiating.
Yep.
And then you'll see the market adjust accordingly, because he's not just phoning me, he's phoning everybody else, you know. So there's a bit of that. And I just loved that, because, you know, every day was completely different. You didn't know what you were going to hit with. You didn't, you know, you could be sitting with a large amount of stock in a particular company and some really good news, or alternatively some really bad news might come out in that particular company. It could be a profits warning pre-market or something, and you go in and you go, oh dear, that position I've got, I'm holding a few million shares, has just dropped 25%. Going to have to do something about that. So, you know, things like that, where certainly continued to spark my interest. And I worked with a bunch of great people, and you know, we had a good laugh, and it was stressful. It was, you know, it had everything you would want. And I went from kind of shy little boy, came out of university, to somebody who was broken and rebuilt, I guess, by your colleagues, you know. And do you know what? I was good at it. So I rose through the ranks fairly quickly, and to a senior market maker position. So I had a bunch of other market makers reporting into me. So I'm managing the risk across areas of the firm, and, you know, all of that stuff. So it was really, really, really good fun. And I've stayed in the industry ever since. And I still speak to my old colleagues. I still speak to the people I would trade with and against, that you'd be shouting at 1 minute over the phone, calling them all sorts, and then meeting for a pint in the pub after. You know, it's that kind of environment. There's a lot of camaraderie.
Brilliant.
And I loved it. Absolutely loved it.
Thank you. I love that response. Thank you ever so much for giving me that full response. I really appreciate it. Now, from there, you know, you said that you got consumed by Charles Schwab, TD, etc. You moved on from that role to CMC Markets as regional head of Scotland, IG institutional sales, and then interactive investor as head of product. Please, can you share with us your accumulated greatest lessons from those significant roles that you held?
Oh, I certainly learned a lot, because you move from basically a market maker to a position within, for example, CMC Markets, where you're like, right, you're now regional head of Scotland, go get an office, set up a team, sell a product. And again, I like things that challenge me. I guess I got that job with my markets experience, and fairly at that time, I guess, fairly limited knowledge on what, leverage trading was and what are all these things, CFDs, spread betting, and CMC Markets was a real game changer at the time. I think it'd gone from deal for free or whatever in the early noughties to become CMC, and they're now a major company, led by Peter Cruddas, and great team, still a formidable player, and from there into IG. So I learned a lot about different company dynamics. I went from a small company, really, I know we were owned by Charles Schwab TD, who were massive, but in all intents and purposes, we were a small team, to working for big companies, big agendas and big teams and various layers of hierarchy and stuff. So that was, for me, a great learning curve. Just managing my remit and reporting into London, and just all of that was you can understand, anyone listening to this will understand the dynamic change, the politics and everything else that comes with it. And I thoroughly enjoyed my time there before I moved into IG, which again was an even bigger player, still are, massive global company. And, they were absolutely smashing out of the park, at that time. I believe they still are. And, I thought, great change, another product provider. They wanted me to do something slightly different, which is more focus on institutional relationship management. That basically involves other institutions with large client bases, white labeling or grey labeling or product and whatnot there. So again, different toolkit, different face on, different client community and everything else. But this was all removed from Mike making a price in Marks and Spencer or whatever. Quite different.
Yes.
There was none of that. It was more kind of sales, team development, building a brand role. So you learn a lot around product, marketing, your client behaviors, big corporate strategy, managing your P&L for your firm and hiring and firing and all that jazz, that I'd not really done before. Kind of thrust me into that light. So, I enjoyed that. And with with the kind of product side, that led me into, I had a great opportunity came along really to join Interactive Investor at that point. And again, Interactive, when I joined, was, it was a beast. It'd been through a few changes. It was a large kind of financial information website. They had a relationship with a third party, Halifax Share Dealing, for all their share dealing needs. And then around the time I came along, some of the guys were like, right, we're going to bring this in-house. So they built the whole kind of end-to-end broking business in Glasgow here, where I am. So it was a good fit because I could operate out of Glasgow with my product hat on and, watch this massive project underway, where they're basically building their own share dealing service, migrating hundreds of thousands of customers over into this new way of doing things, and watching that grow. So that, again, that was just to be around. That was a great opportunity and a great experience. And I again was more focused on product, what clients want, market trends, what do people trade in. I would manage a lot more of the more specialist products around, whether it be derivatives trading, because obviously I just come out of IG, and through to structured products, futures and options. All these, do our clients want it? How do we use our products to attract more high net worth, sophisticated investors? How do we increase our AUA? all of that, was close to my heart at the time. And at the same time, in parallel to that, I would be a spokesman for Interactive Investor on, day-to-day market moves, what investors were doing. And I loved it. It was fascinating, because instead of going back to being a market maker, you're actually looking at, okay, what motivates retail investors, with their pension holdings and all that kind of stuff, which I didn't really understand until that point. ISA season, all these things, that were all kind of over there, all of a sudden kind of landed in my lap. So it was around product, knowing the market, working with, we're a large, marketing division. We had our own kind of, we had a couple of financial information news brands and whatnot. So it was a fascinating business, and still is, and they were recently acquired by Aberdeen for $1.5 billion or something. So I'd gone well before that, but around 2017-18, and they're still powering ahead as one of the biggest online brokers in the UK, and I watched a lot of that journey happen on our watch, and it was a great team.
Brilliant. So having covered all of that, from being a market maker and having done risk management as a degree, the only thing that's not in your portfolio at this point in time regarding your work,
McDonald's,
is you've done McDonald's as well, yes.
Second best job actually was McDonald's.
You've not been really involved with privately held companies per se. So you're now looking at this, and the idea comes up. How does the idea come up in the first place regarding formerly CrowdX, now InfinitX?
Yeah.
Who were you sitting down with? What were your thought processes? What was the market you were looking at thinking, that's an untapped market there, let's sort that out? What happened, Mike?
Well, it's a kind of long story, actually. So I'm not the founder of InfinitX. So we are a pure technology company. So I've been around the technology and the guys that build the technology and everything else, like, my whole career. And I remember even in my market making days, there was a few startups like ScotX, which was around trading in matched bargains in private companies. I'd be looking over the hedge going, what do they do? And what do they do that's different from what I do? So I was all public market stuff. And, liquidity has always been a major talking point throughout my entire career. And I remember even in the 90s, well, I started in 98, 99, but, I was aware of the likes of Jenkins and their transition into OFX and the explosion around .com and their journey becoming, ISDX, Michael Spencer, then NEX, and now ultimately Aquis Exchange in London, through various iterations and different licenses and whatnot. But I was always interested in, okay, well, how do they do that? How do they unlock liquidity in private companies without them being public? I didn't know. Now I do, obviously. So that's always been there. And then I'd met with, I'd been introduced by a good friend of mine to a chap called Andrew Foster, a South African native living in London, who had built, strong technology background. And he had a few guys with him that he introduced me to. Now my CTO, Derek. And these guys have been in and around this technology space for their entire careers and supported other public markets, private markets, and everything else, and actually coding the technology that powers this stuff. So, I met with Andrew and we got in my house and fire. Great guy, everything else. And he's like, well, okay, well, I've got this over here. This isn't my day job. Do you think you can do something with it? We've built technology which powers private markets, And I was aware of, guys in the US like CartaX and Forge and, NASDAQ private markets. And so obviously I got my fingertips going on Google at that point. so I could do much more work. And you could see size of these markets, and especially the US. And okay, why is there more liquidity, and why is there more, private transactions going on over there? Then understanding more about the corporate culture over there, employees, share ownership, all these things. And then looking at the UK and looking at the number of players like from cap table management solutions like, Vested and, seed legals, and then the registrar community and whatnot. And okay, well, how do we use technology over here to drive liquidity like they're doing over there? Nobody's really cracked it. So with our technology, we knew we were able to crack it, because the way things were done traditionally was very manual, very over the phone, Excel spreadsheets and all the rest of it, whereas we can actually add in a layer of technology that can plug in to the market and offer that match bargain trading solution to ultimately a wider audience. So, and sell that tech globally. So as a global tech player, obviously my background crosses trading financial markets to selling tech to other parties. I thought, well, actually now is a really, really timely opportunity to get thoroughly involved in this space. I jumped to the opportunity. I'm not going to lie to you. It was really exciting, really interesting bunch of people. It was right in the middle of COVID and the pandemic. So interestingly, I mean, I didn't meet Andrew physically meet him until about 6 months after taking the job as chief exec. And by that point, I can go on about the journey to where we are today in a minute. But it was very exciting, because you were in a strange global pandemic situation. I had a box of tricks. We needed to formalize a company, get it financed, go through the regulatory hurdles, get our governance in place, get it financed, get it moving, bring in the support and the team that I needed around me, and went on that journey. And here I am a couple of years later. We've just acquired JP Jenkins, and we're going from strength to strength. So yeah, I've been really happy with the journey thus far, and long may it continue.
Brilliant. You've just touched on it there a little bit. I want you to expand on it. In January of this year, you purchased JP Jenkins, the most recognised brand in the UK secondary market space for private companies. What were the drivers for that acquisition, Mike? And what does it mean for embedding the fintech technology of InfinitX with JP Jenkins, please?
I think when the opportunity came along, it was more around optics. Just when it came to me, there might be an opportunity to look at a business, and obviously I knew who JP Jenkins were, and we thought, well, as a technology company, we know JP Jenkins runs a fairly traditional non-tech led model. It's the most recognized brand in this space in the UK. What if we plugged in our technology would allow us to showcase the technology that we powered by CrowdX, which now became InfinitX. And how do we do that? And and in principle, it was a nice idea. But then I met the team, and I'm more interested in people than I'm in products. So I met the guys who were running JP Jenkins day to day, and we loved them. We just loved the ambition. They could see what we could bring to them, which is really important. And they got the value add. They were buying into the global dynamics of what we can do here. And after a few months of the usual due diligence, lawyers and all the rest of it, we came to an agreement for an all share acquisition of the business, and lock, stock and barrel. Just moved them into new premises, and we're getting them motoring, and we're doing great. We're absolutely loving it. So we want to obviously build out that team. It's now given us it's now given us a presence in London, which is still very important in this business. So London's become more kind of front office, client relationship management. Glasgow, where I'm sat today, although I kind of switched between the two, is more kind of back office ops, if you want to call it that. And we've just gone through the journey of linking everything up and doing all the fun stuff to get the business motoring. So it's working out really well. Couldn't be happier with the team. We're about to, I mean, if you go on the websites right now, we're doing a lot of overhaul and the brand and the service layers and the team and everything's watch this space coming soon. And we're working with a number of, shall we call them, financial intermediaries in the space as well. So yeah, we've got lots of good stuff happening, and we're very excited about what the future holds for the JPJ brand as we build that. And then obviously, what we can do internationally and at home with InfinitX and our technology, which is, second to none.
Brilliant. Now, I wanted to touch on, because a lot of people haven't dealt with unlisted companies before.
Yeah.
Can you describe JP Jenkins as a liquidity venue for unlisted assets in the UK?
Yeah.
Which type of assets do you accept?
Well, mainly plain vanilla.
Your criteria.
Well, it's mainly 95% will be your standard equity in these companies. Yeah. It's generally the businesses that come to us are kind of been around for a wee while. They're kind of pre-Series A, and they've got good governance in place. They probably have audited accounts. They've got grand plans. They want to IPO at some point in the future. They might be under a little bit of pressure from early stage investors to provide some liquidity and exit. And that is ideally the kind of client that we work with, because through our proposition and service layers and everything else, it's all about enabling and driving and accelerating their path to exit, IPO, whatever obviously the clients, they run their own business. We provide a service for them, and it's pretty straightforward, really. Client comes to us, we meet them, and they may have an advisor or somebody that they might need some external support. We onboard them, we get them set up in Crest, which is, for transactions, trading, settlement, and everything else. We put them onto that system, and they become tradable through your broker, through your nominee account, and everything else. Different from public. I mean, you can again delve into that area if you like, but there's different dynamics around, because most companies will require certainly a shareholder resolution to go through, amends to the articles of the business, preemption rights, everything else. All this all has to be fully analysed, walked through with the client, and then putting them on that journey one step at a time. So it's not, but yeah, I mean, it's still a lot quicker than if you want to IPO, that could be 2 years and £1 million. We are more of a progression stage for these businesses that are on that journey. And you've seen the other day the LSE are now doing making some announcements around that as well. So there's a lot of interest in this space. Going back to the point, I thought it was timely to come in. We're now seeing everybody talking about what we can do in the private space. And now the LSE
it's growing absolutely rapidly. I was going to touch on a bit later on about the fact that LSE, London Stock Exchange, made their own investment in Flow last March as well. In that secondary market space. But I wanted to just keep on stick to the private market space and the entrepreneurs and the startups. There's a piece of research recently from Bolhurst, the private company research house, and they touched on the fact that the rest of the UK saw equity investment fall of 30% last year. You're based in Scotland. Scotland bucked the trend and actually rose by 12.6%. Mike, do you have any insights into the outperformance of Scotland? And are InfinitX and JP Jenkins going to be taking advantage of those startups and untapped companies within that space? You're there, you've got the foothold in Scotland, and everyone knows of you as well, across the country.
Yeah, I mean, obviously I'm a Scot. I'm obviously passionate about everything Scotland, but we run a UK business. We're my entire career has been. So JP, if we focus on JP Jenkins, that's primarily UK, and I guess outperformance with regards to deal flow, quality deal flow, investor base. There's actually a very good, strong, albeit small, perfectly formed investment community within Scotland. And they do a lot of deal sharing, working together, everything else. There's lots of really good players in the space up here, like Impart Equity, we can talk about them, they're in Edinburgh, various others, Kelvin Capital in Glasgow, Scottish Enterprise has got a brilliant system set up. So yeah, I think you can identify quality, and there's good support layers within the Scottish ecosystem for not only startups, but companies approach kind of SME type size as well, to getting them obviously financed. I mean, that's one of the problems we are trying to address, because again, I mean, you hear lots of people talking about this. Back in the good old days, we had 40 odd exchanges in the UK. Companies could go locally to raise capital. You wouldn't have had shipbuilding in the Clyde if it wasn't for a local market for raising money and all this. That story's throughout the UK. It's not changed, So, but since the 70s, it's become very London centric, and that just means all of the skills, or lots of the skills and expertise around larger corporate financing, etc., all went to the square mile. So you lost a lot of that, and I think collectively we're all trying to redress that. There's lots of great stuff going on in the north of England, Leeds, Manchester, Liverpool. Lots of exciting projects, lots of localized initiatives supporting business. But yeah, I think Scotland's bucked the trend. Perhaps there could be some outliers there from great opportunities. We have seen some big ones come out of Scotland in recent years from Trustpilot, Skyscanner, and various others. There's been some pretty good plays. So, and we've got a brilliant support network, FinTech Scotland, various others. I mean, there are options for young businesses looking for support. There are plenty of people you can pick up the phone to, talk to, arrange a meeting. I think that's a real strength in Scotland right now. And long may it continue.
Yeah, long may it continue, because as you touched on briefly there, Scotland did have its own exchange for a good while, and it's probably one of the last ones that was left in Scotland.
It was,
before everything got centralised down in London. Yeah,
I mean, it was centralised in Scotland first. We had 3 or 4: Edinburgh, Glasgow, Aberdeen, somewhere else, I'm not sure. They were all centralised to Glasgow to become the Scottish Stock Exchange. Back in the in 1973 or something, all before I was born. His dad, and yeah, I mean, and then it was just ultimately swallowed up by London. So Glasgow Scottish Stock Exchange became part of the London Stock Exchange, I guess, and there it is to this day. You've got the powerhouse in London, and it made sense at the time to do so, definitely because of the lack of technology. You'd have a market maker in Glasgow making a different price from a market maker in Newcastle, and now everything's technology-led, electronic. You can get a real-time price wherever you are in the world. It doesn't matter where you are. So what we need to rebalance is the support in the pockets of finance available for great businesses, throughout the UK. You shouldn't have to go to London to get financed, is what I'm saying.
Brilliant. No, thank you for that reply. Now, I'm going to touch on a piece of research here from Jefferies Research.
Yeah.
They recently stated that the investor's portfolio currently allocated to private markets, Mike, globally is 24%. What's the estimated size of the whole private markets globally that InfinitX and your company
it's a multi-trillion-dollar market. Yeah, it changes with every report you read on it. But look, it's an absolute behemoth, and also with the the transfer of wealth, which is really undertaken right now, and over the next 20 years or so is huge. So there's a lot of what do you call it, dry powder. I think it's a technical term people use for it in the industry. So there is untapped potential there for businesses to receive investment at an earlier stage and bigger size, and have much more transparency around those companies to make them more investable. Right now, it's the remit of, high net worth, sophisticated, really knowledgeable investors that come into this space. But yeah, that is changing with, liquidity, transparency, the ability to exit, better governance, better regulation around the space. That will change dramatically in the years ahead. And I think we're certainly very well positioned to capitalize on that, because we can take our tech pretty much anywhere on the planet we want to go with it. Because it's all about plugging in that ecosystem of players wherever they may be in the world, within a good quality regulated environment. We've got, there's clients we're working with from Germany to New Zealand right now. The US market is still by far and away the biggest place in the world for this. So we'd obviously like to, we're obviously making moves to get ourselves in there. And that would be largely through licensing or tech, or working in a JV relationship with others in the space who are quite evolved. So
you overlooked on two of my questions there, so I'm going to go back to one.
No
as
problem.
in you're actually in a sweet spot here, because the Financial Conduct Authority recently announced a series of initiatives to help secondary market conditions.
Yeah.
What were these initiatives, and did they align with InfinitX's strategic goals, Mike?
Yeah, certainly. I think, there's a lot of consultations going on at the moment still around, certainly they're trying to make it easier for companies to list, publicly IPO. But I think our argument is, actually a lot more can be done in the earlier stages, which is why you reference flow and more involvement from some of the bigger guys in this space with the earlier stage businesses, because there's tens of thousands of businesses that can be ready for private markets, whereas there's tens of businesses which are might be ready right now for IPO. So I mean, our argument is we don't want companies to IPO too early. We want companies to go through the journey, generate some liquidity, understand the sensibilities around being public, because that can be a shock to the system, to plenty of CEOs that go from running a great private business to all of a sudden, a public company. So there's a whole lot of more requirements around you as a business. Could be a shock. We're that kind of gentle journey into that world, and with the optics around having liquidity, having an electronic price, having the use of some of our partners like EQS and whatnot to get that market information out there around your company. It's driving value for investors, but also having a sensible, steady approach to public markets is where, and look, everybody wants to do that. And I know the FCA are looking at it, LSE have been looking at it, we're all looking at it, but this is nothing new here. They've been doing this for a long time. Over in the US right now, they've got they've now got NASDAQ private markets. Carta X is going great guns. They were a cap table management solution. Now they were Carta, and then they became Carta X, and they've now got a good function for companies looking for a liquidity solution. So it's still the same old story. We're always 10 years behind what they're doing in the US. So let's up our game over here. We can do it. The regulator understands that, the players understand that, and if we all get together and do it right, because look, ultimately we want to look after the underlying business, make sure they're coming on to us at the right price point, the right journey. They get what they get what we're here to do for them, and ultimately make their exit or IPO proof will be in the pudding, but ultimately hopefully make that much more successful. Similarly, some companies have been coming off the main markets, and they still want to, obviously, don't forget about the underlying investors, when you provide a solution for them in order to either hold or trade stock from their regular share dealing account. I think that, again, that's where we are. We're in that service space, but we are excited at our book of clients now, also the ones that have been onboarded, various different stages, are really exciting companies on the up. They'll join us. They might stay with us for 2 or 3 years, while they're working on other areas. There could be, you know, obviously planning for their IPO, working with a nomad, whatever else, and just making sure that timing's right. You know, when is the best time to IPO? You know, the market changes, as you well know, ups and downs. Right now, it's been a very difficult environment, as we all know, in the UK. So we can hold companies back, you know, on that progressive stage, sit with us, wait for the timing, and again, with my market maker hat on, you know, get the timing right, and you'll pop onto the market. Everybody will get involved. The market makers drive the liquidity and hopefully the price higher. This is what our clients want. Investors
Absolutely.
want.
I'm going to touch on some of the companies that, just after this question. I want to get this question in, Mike, because it seems to me that there's a massive, massive market. You touched on the US there, and you've got the behemoth hedge fund, Tiger Global, is currently seeking options to liquidate $40 billion worth of portfolio in private companies to tap into secondary market. You must be absolutely, your company must be salivating. You know, it appears that, you know, exit strategies are needed for these large behemoths to get into other markets, and you want to be able to match some of that. You know, you must be going, like, come on, what are your thoughts?
Well, I think, you know, that Tiger just won, but, you know, I think, you know, there any number of, you know, funds from, you know, family offices to ESG funds and everything else around there. Okay, they've got smaller pots, but, you know, I think with our solution, it's driving that liquidity for these funds as well. So if they want to pair, take some money off the table, they've got company X, you know, they want to reinvest in another opportunity, you know, they can bring that business to us. We can provide that liquidity point for them in the right cordial manner, and allow them to perhaps take some money off the table and invest in other opportunities. So it's all about making sure that money flow is there to help support these underlying young growth businesses, which we can't forget are the backbone of our economy, whether you like it or not. You know, it's providing the jobs, creating the ideas. We want to be able to support that network, take a bit of the risk off the table for the budding entrepreneurs that are growing businesses, making sure there's finance available for them. And through the likes of us, we can do a bit for the economy. You know, I mean, there's a reason why, you know, companies have been going to the US to, you know, to list, to raise finance and everything else, because they've got a vastly bigger, let's call it, ecosystem around and support for growing businesses. So people see it as a, you know, as a risk-off approach when they see a company going to the States, you know, because they'll be underpinned by a much more liquid investor environment for them to support them through the various trials and tribulations of growing a business. Yeah,
thank you for that reply. Now, I want to touch on some of the current companies, and also the fact that one of the most recent delistings, iEnergizer, has been admitted to your share matching platform. You've got the likes of MJ Hudson, Goodbody Health, Millwall Holdings, Millwall Football Club, Rangers International Football Club, which I'm sure
I think
some of your team have probably got.
Number.
Yeah, I saw you smile straight away there. Previously, you've had Arsenal, Liverpool, Man City, you know, all on the JP Jenkins.
Yeah, I think some of them are certainly legacy.
Established companies.
Yeah, some of them certainly legacy that might not be trading anymore, but we've got some great businesses that are coming on. Again, iEnergizer, and but yeah, so we are working with obviously a huge portfolio around, you know, 50 or 60 businesses right now that are at different phases of engagement with our firm. So yeah, I mean, there's certainly the average kind of market size of businesses has increased significantly over the last 6 months since we acquired JP Jenkins, and you know, there's some big ticket, let's call them cornerstone companies coming our way, which obviously we're really excited about. So we're all about quality, showing our clients obviously the service they need. Regardless, we're fairly sector agnostic, but we are layering in other elements to drive transparency, like, you know, ESG reporting, impact reporting, various other factors which will influence an investor's view of a business. So over time, we will try our best to obviously make it much more palatable, transparent, more information on these businesses that will ultimately drive more liquidity, investment profile, everything around them. So yeah, I think with our book of business, you know, we couldn't be happier with some of the companies that have just joined us, and you know, we'll see where they go.
Thank you for that. Now, there's an important point that I need you to reiterate for the retail investors that haven't used your platform before, with regards to the fact that, you know, you were a previous market maker, but JP Jenkins and InfinitX don't actually make a market.
No.
Yeah.
No.
You purely match at a price.
Yeah. So it's willing buyer meets willing seller. Yes. Yeah. So, I mean, the difference is, I mean, you have market makers obviously to drive liquidity, stabilize the price, and everything else. That's all public markets. We don't have that necessarily in the private space. Certainly not market maker driven, but we can use technology to help support and stabilize as well. So optics around from an investor's perspective, you know, they come to us to obviously see the companies that are available on our platform, but it still runs like they would be buying shares on a public market. So we sit in the middle, we have, okay, let's call them gatekeepers. Those gatekeepers are brokers. They would need to reach out to their broker. They would need to be assessed or find a broker. They would need to be assessed for suitability and everything else. And at that point, via their broker, they can then access our venue. So we're not a market from a regulated firm or exchange. We're a March bargain facility, or to use another term, I think we're a bulletin board as well. So, but these companies need to be onboarded. We need to, as I alluded to earlier, we need to make sure that obviously everything's fit and proper about providing and having the approvals in place. We don't do, I mean, there are firms out there that it's specifically in the US and other places that will do, you know, unauthorized share trading, whereas we work directly with the business. Everything's authorized. Everything's approved, and then, you know, they may have they may allow buyers and sellers to agree where to meet. So there is a reference price, a mid price. There's a trading history. You know, they will post a limit order. I want to buy X shares at a certain price, and you know, if we find a buyer, a seller rather, to match their bid, then off they go. You know, we changes hands, runs through the crest system. Cash and stock changes hands, and you know, that is how the model works. But because of that layer, it means it's only for investors that, you know, are deemed to really know what they're doing in this space. That will change over time, but right now it's onboarding, suitability, doing it right, and you know, willing buyer meets willing seller, and somebody can sell. Obviously, somebody can then hold the stock.
Brilliant. Thank you for expanding on that, Mike. I really appreciate it. Now, I want to just have a little break here now. I'm conscious I've had you on for a little while, but I must speak about your own investing strategy, Mike. Where do you invest your money, your diversification? Do you have your own ISA, your own pension? You know, you've been doing the markets for ages, mate, decades. So you must have something going on there.
Yeah, I am. You know, I've dabbled in very short-term trading, as you can imagine, being in the leverage spread bet CFD space and everything else.
Yes.
And market making, you know, you can be a rock star when you're trading other people's money, but when it comes to your own, I've had a few disasters. I'm not going to lie about that. I'm more your kind of patient capital, you know, decent yields, only invest in what I understand, you know, and I'm pretty patient. But, you know, I certainly, when I speak to my friends and other people who invest, we couldn't be more different. You know, they expect me to be the super short-term micro FX trader, but no, I don't have time for that because I'm a busy man. You know, I've got a small portfolio mixed with some private and public, and I'm pretty happy with it, to be honest. Nice spread of risk. Do your homework, you know. Trade with the trends, not with your friends, as they always say, and stick with it. You know, do your own analysis, research. and make it interesting. You know, I think that's back to investing in what you know. You know, invest in stuff you're passionate about. You know, areas you're interested in. That could be AI. That could be, you know, environmental. You know, it could be anything really. So I mean, whatever floats your boat from an investment perspective, do your homework and be careful. You know, don't put all your eggs in one basket. Is key to all this.
I love that you touched on the fact of the importance of doing your own research as well, Mike. Thank you for saying that.
Absolutely.
Because so many people will just, you know, FOMO and just chase whatever's going on and whatever's on trend almost.
No, we were talking about, we had an executive meeting this morning and everybody was just talking about AI for an hour. We didn't really get much work done. You know, it was all about, you know,
it's a massive topic, Mike. I did have it in my questions here, but I figured I'd run out of time. I've got another question after this, and it was this. This was going to be my question to you. As a CEO who does a lot of navigating of the tech space, fintech space, the relationship with AI and its efficiencies and cost saving benefits are great. Yeah. How do you marry that with the potential societal risks and the impacts regarding jobs and other things going on? It's one of those yin and yang sort of discussions, isn't it?
Yeah, I know it's so topical. You know, we're actually laughing about it this morning. Okay, nobody's talking about, you know, NFTs and Web3 right now. That's all last week's story. It's all about AI and how it's going to change the world and take your job and everything else. I think we've all predicted not Keynes back in the 30s that predicted the 14-hour working week. It's not exactly materialized, but certainly look, AI is going to be revolutionary. You know, there's no make no bones around it, and it's certainly going to drive a lot of factors in this space, in our space, in finance and investing, quicker than you know it. You know, we just have to keep an eye. We're not an AI company, but you know, we work with others that build in that space. Clients are coming on in that space, but yeah, I know it's a real game changer. Hopefully, more positives than negatives come out of it. You know, hopefully, can rebalance some of the ills around the world, especially the wealth gap and everything else. Wanted to create jobs, create value, make things more efficient, but you know, less efficiently. You know, get the positives out of it. And not drive it towards selling us more stuff we don't need to buy.
Absolutely. Mike, I've got one final question for you. I'm conscious I've had you on for nearly an hour now. You've been exposed to and experienced the financial markets from several different angles over the past few decades. What are the recurring prudent pieces of investment knowledge you would like to share to our global audience of ultra high net worth individuals, CEOs, institutions, family office, IFAs, journalists, analysts, and retail investors? A couple of pieces of absolute nugget to go. You've got to think about these sort of things, individuals.
Well, I think, look, I mean, the audience you mentioned may know better than me, but you know, I think it's just be on point, be nimble, and be ready to move when you have to move. You know, you're not going to get it right every time. So I think people talk about, you know, you got to know when to get out, you got to know when to take a profit, which can be hard, and you got to know when to cut a loss. So I think these are the key things, and I think I learned that quite early on, even back in my market making days, because you can be staring at a loss, believing it's going to turn around, and you're like caught like a rabbit in the headlines. So you've got to be, you got to be quite resolute in your decision making. And when you enter a position or a trade or an investment, you got to have your parameters. You know, I'm aiming for 5-10%, and if it goes wrong by 2 or 3, you know, I'm getting out. You got to be ruthless. You know, I mean, that's what's worked for me. You know, don't go chasing profits, and equally don't go chasing losses. You know, and balance your portfolio. You know, equity, debt, long term, short term. You know, it's all there. And look, because of, you know, services like yours and plenty, there's so much information out there. Stick to your knitting, stick to what you know, stick to what you're interested in, and cut your losses, take your profits at the right time. That's the key to this.
Thank you ever so much. That's pearls of wisdom there from Mike McCudden.
Yeah.
Mike, thank you ever so much. Mike McCudden of InfinitX and JP Jenkins.
Yeah, thank you. Really nice to meet you.
Growth platform.
Yeah.
Been a pleasure.
Absolute pleasure. Yeah, anytime.
Thank you very much. And I will hopefully get the opportunity to speak to you soon, Mike. Take
All
care
right.
and God bless you.
All right, you too, mate. Thank you. Cheers. Have a good one. Thanks.
Thank you for taking the time to listen to Investing Matters. Be sure to check out the London South East website for free tools and info to research your next investment. You can also join in the conversation on our social media channels. And don't forget to subscribe to our YouTube channel for more content, including our CEO interviews. Catch you next time.